Hi, welcome to your carrier update, brought to you by PowerFleet. I'm Mike Vincent. He's Zach Strickland. What's going on, man?
Not Donnie Gilbert. So we've got our tender rejection index for the United States, and I drew a line for you, Mike.
You did.
So
wow.
You could see
nice job. It's very straight.
Where it's going, because this can get confusing. All this bumps and jags in the road, we can get confused there. I wanted you to focus.
I get distracted easily.
I wanted you to focus on this line right here, because you put your ruler under it like back in elementary school and draw a big straight line right here. What does it look like to you?
Looks like things are going down.
Down. Everything's coming down. Our little bump from July 4th, not say that it's irrelevant, but...
What is this? Outbound tender rejections.
Outbound tender rejection index. It's 21.67%, the lowest it has been since February, way back in the polar vortex days.
Yeah, right before Texas froze. Down 19%, right? Since mid-February.
Yeah, 5 percentage points or 500 basis points, whatever you want to call it.
Yeah.
Since that end of February spike there, but it is, the trend line, you can see it pretty cleanly. We have returned to trend. We talked about this before the 4th of July.
Yeah.
Returning to trend, and I'm curious to see just how sticky this trend line is, because it is almost. You can see this straight line right here. It is a very clean line that you're looking at outside of these little jagged tails. I called it a stegosaurus tail.
That's pretty good. That's pretty accurate. I think you just coined a new term. But this is, it's a pretty good drop, right? Almost 20% since May.
Yeah.
Or since not May, but since beginning of March or mid-February is pretty good. Are you expecting that? Well, we got to keep watching to see what happens here.
It looks
imports and stuff. You hear it's just talking about the effects of on the ports with the imports surge.
Yeah, demand side stuff is looking not remotely the same. So if we look at the OTVI,
right on. Let's do it.
I drew the same line for you, same period, and you can see there is literally no change. Between that point and
not
this
much
point.
at all. Same exact point, right?
Exactly.
I mean, you've got changes that happen, right? Yeah,
obviously
there is volatility that occurs in between those, but the overall change and holidays. That's amazing. So why is one dropping 20% in the same time frame as one is just hanging? Well, we got 20% more capacity out there now?
Since the tenders are measuring total tenders, the accepted tenders have actually gone up. So basically all this is indicating is that as demand remains high, carriers are accepting more of their contracted freight.
Yeah, they're not jumping out into the spot.
Exactly.
So shippers are having a little bit easier time.
Slightly.
20% better than awful.
Yeah.
Time holding their routing guides together,
yeah,
right?
So
which is a contract rate.
Exactly. They're adhering to their contract rates a little bit more right now. Demand is remaining extremely elevated, though. It's going to keep pressure on the market. So all that volume that's coming in through the ports, especially as Yanshan comes back and everything comes back into those ports, once again, this could get disrupted one more time.
And it's staying there, right? Mm-hmm. I mean, you still got this high level of saturation for demand.
Yeah.
Which can tick up and tick down and can change from one point or another in the country. I'm sure we'll look at a map at some point today.
How about right now?
Let's do that.
Let's look at the map right now.
This doesn't mean, hey, you know what? You don't need cruise control, man.
Yeah.
Everything's fine. No, look at this map.
No,
not
this is
cruise control.
Yeah, and this is our weighted rejection index map. You know that the reds indicate loosening, the blues indicate tightening. Before the 4th of July, we saw a bunch of blues. After the 4th of July, a lot more reds than we've seen on here in a long time.
Yeah, check that out.
And the southern tier really showing a lot of easing. And I don't want to say that everything's getting
So that's a weighted tender rejection is your colors.
Yeah, that's right.
Gotcha.
So this is week over week change in rejection rate combined with market share. And these reds are really it just means that these red markets are getting a lot looser than they were last week.
Relative to themselves.
Versus last week.
Right.
Versus last week. So
gotcha.
Overall capacity still really tight throughout the United States, but the southern tier really showing a dramatic decrease. And if we go into the charts next to show some of these markets on here like Atlanta, Savannah, Dallas, and Houston, you can see what I'm talking about. So you've got the tender rejection index for Atlanta here in blue, dropping to about a 24%, was up around 31% before the holiday. Then we've got Savannah right here, dramatic drop. We're talking about the ports and the volumes there, 30%, and it's been operating above 40% since March.
So it's dropped all the way down to 1 in 3 loads.
1 in 3 versus 1 in 2.
Man, loose market.
Yeah, loose market, but still 30%. Obviously, the tightest market on here. Houston down around 18% now.
Yeah. So, wow.
Yeah.
Okay. Yeah. So I mean, volatility is crazy, right? Jumping in back and forth that much. So excellent. Let's we look forward to another update here in just a little bit. There. Thank you so much, Zach.